Welcome to Drill Down Earnings. We have quarterly results out from Okta, such an interesting company in the world of security because they really have dominated this identity business that they run. This is the business story behind one stock on the move, and yes, the stock is moving. I'm Cory Johnson, Chief Market Strategist for Epistrophy Capital Research. We look at the 50 most important companies in technology, and Okta is certainly one of them. Is Q4 earnings for them, Q4 2025, so it ends in January. But beating Wall Street estimates, both in terms of revenues as well as non-GAAP earnings per share. For those of you who like both estimates and non-GAAP earnings per share, is actually a little bit less than my estimate, but it's certainly beating the Wall Street estimate. And it was a really strong quarter for this company. So the growth rate is slowing down, to be sure, 13%, but there's a lot of changes here. So let's not miss the moment here. When we look a little bit deeper at these numbers, we see the business actually turned an operating profit for the first time ever, just a 1% operating profit. They've been reporting non-GAAP profits for a long time, but I don't do non-GAAP. I like the real numbers. So an operating profit is something for this company. You can see it coming. They were getting closer and closer. The thing that they tell us, the most important statistic they tell us in terms of predicting future revenues, is not just remaining performance obligations, RPOs, a lot of software companies do that, but the current RPOs. So they have long-term contracts that they have out there that they think they're going to get paid for, but the amount of money that is current, the 12 months or less, in terms of how much of the RPOs are going to come in through their front door and end up on the income statement. Current RPOs means new customers, it means upselling existing customers, means renewals, or long-term RPOs becoming current. All those things add up to CRPOs or current RPOs, and those numbers went straight up this quarter. Again, it's a non-GAAP number. It's a number they give us every quarterly press release and in the conference call and conference calls, slides, and all that stuff. RPOs have just blasted off for this company. And they have told us over and over again, and they told us again today, that this is the most likely, the most reliable indicator of future revenues for this company. So when we saw the revenue growth rate down to 13%, which is still pretty good for this company, the idea it's going to rocket up again because these RPOs blasting off is really good news, and that's why the stock took off today. The stock was up 15% in after-hours trading after being down 20% in the last year. Not a great year for this company. Why? Well, what these guys sell, they sell their Okta solution. They sell their Auth0 platform, as well as Okta Secure Identity commitments. And fundamentally, this is about proving that the identity of the person logging into a system is the person who they say they are, not through passwords, but through really understanding who that person is and what that individual is allowed to navigate, as opposed to sort of having firewalls at every step of the way. It's a unique approach. Zero trust, if you will. Indeed, we expect Zscaler results, another company that does this similar approach. But Okta just really dominating in their business units. And one of the discussions here was a place where they've seen a lot of growth, which is federal government business. Of course, we know about the chaos coming out of the White House and DOGE cutting left and right, or not cutting, or not really cutting, or saying they're cutting, and people fearing for their jobs, and all of the chaos that's coming with this unknown entity of a president. We should have known what it was going to be like here, and maybe Elon Musk's involvement as well. What's the likelihood of more Okta business, of contractors sticking their necks out and making a decision about how new technology should work in government? The CEO of Okta, Todd McKinnon, was really bullish in his comments about what was happening in the federal government and what their solutions might mean for a future, stronger, smarter, cheaper federal government. Here's Todd McKinnon.
The federal government has a lot of legacy identity systems. The agencies we've been successful in is because we've been able to consolidate and replace and really help modernize those applications. And I think that when you talk about efficiency and effective government, we're like perfect for that. You don't have to manage servers. You don't have to. The implementations are much easier. The time to value is much higher. The amount of people it takes to run our services and run our systems at a customer is far, far, far less than the legacy identity technologies, but they have to upgrade it and maintain it. And it's not because it's because the legacy technology that surrounds these identity systems it's hard to integrate to. But as those things get modernized and the federal government goes for more efficiency, we're going to have a big opportunity to help them do that. And I think, there's probably a little bit of uncertainty right now, especially in the first part of the year as things get sorted out. But I'm very confident that we're going to be we're going to be very successful in the federal government and helping them modernize and be more secure. No one wants a federal government that's not secure. I think that's probably the only nonpartisan thing in Washington these days. And we can help them be more secure, and that's why we're so excited about that opportunity.
So something everybody can agree upon. Wouldn't that be nice? All right, what's it all mean? What's your big drill down earnings takeaway? And what's one number that tells you a whole lot? Well, I've got that. So Q4 earnings from Okta, Q4 2025 ended in January for this company. Their essential drill down summary tells us they had $682 million in revenues, up 13% on year-over-year business. This business is still growing and still growing at double digits, and selling their Auth0 platforms, their Okta platforms, and their Okta security identity commitment has really been great for them, and we can see it in their bookings and their RPOs, their remaining performance obligations. Their RPOs have exploded to the upside, up 15%, suggesting near-term revenue growth for this company in the next few quarters, right here in 2025. For us, 2026, fiscal 2026 for Okta. What a really strong quarter. All right, thanks for checking out Drill Down Earnings. I'm Cory Johnson.